For a swing trader, they're going to be someone who's much more inclined towards a holistic approach. This is an approach that looks at the wider structure, at what's gone on within the market over the past few days, the past week. It takes account of the general story within the market, of news that's come in, but it's reacting and actioning ideas based on where the market really can go at this point in time. So take this situation, for example. This is going to be a trader whose approach on this week, following a trend week based on profile theory, is going to be looking for a more rotational week, a week where they can lower their expectations of directional movement. They're going to play trades that suit a certain type of style. Now, that may or may not mean that this is a highly profitable week for some. It may be a much lower profitability week for others. It's about understanding where the market is suggesting that your performance is likely to come from. So this is then going to be a week that is traded with reduced expectations of size of movement, of ability to continue. Generally going to be a week that perhaps is approached much more from a rotational reversal style type trade. And if that suits you, this is perhaps the week for you. But it's also something you can foresee coming. This is something you can develop into your kind of wider playbook of structural ideas. And so now your framework leans you straight away into this week to much more sort of muted directional trade. But what this also does is now leads you a few steps further forward. What's the implication of this? Well, it's now building up positioning. Now you're looking at this, that once you've balanced out, which was reasonably expected, now you can expect direction to come again. So it means that you're kind of a step ahead of the next move. You're not looking at something from the perspective of, I didn't see that coming, surprised that the market sells off at the beginning of the following week. It's not a new piece of news. The reason the market sells off at the beginning of the following week is that you've had that balance. Now, if the market starts to go, it can actually start to run and it can start to pick up pace. So you can then change your strategies. You pick the optimal strategy for that week, or the optimal strategy at least for the early part of the week, and then you assess with the information that comes in whether this can be another trend or whether this is just one final drive down and then consolidation sideways. So it allows you to that kind of switch of your style, switch of your strategies, your preferred approach to any kind of individual trade, and way that you're going to then approach direction and bias for the rest of the week. That's what a holistic approach gives you. It's looking at the wider structure. It's then building in the story over a number of days to lead you to that much bigger trade. I've just realized I didn't cover Musti's question. I will cover this very, very quickly. What's your confirmation to not having a reversal and bouncing against you on order flow? What I'm looking for on order flow is I'm looking for that bit of pace to the downside, and then I'm looking for pockets of low volume. That's my confirmation. It doesn't mean it won't reverse. And I'm always aware that it can. But once you've got that breakout, the expectation is this won't come back. If it does, you stop out. The trade is over. It didn't work. But the more little pushes to the downside, there's little quick drops, pockets of volume or pockets of low volume followed by higher volume. Each of those then is an indication of the move continuing. And as long as I'm seeing that, I'm confident to stay in that trade. So that's all part of my kind of framework around how do I follow a very specific part of a trade. And that's something that filters into anybody's framework as well. You've got to have not just on the profile on the ladder. So you see the profile on the ladder, the volume at price, the amount of contracts traded at each individual price. Those little pockets of low volume, they're the confirmation points. But like I said, I'm touching on this from a wider sort of higher level framework here, but you need a framework for each different thing that you do as well. A framework for every single way of you taking a trade on. That type of breakout trade, I have a framework. I know what I'm looking for. And as long as I'm seeing it, my expectation is continuation. always asking then the question of, right, is this changing in any way? And that questioning again allows me to stay in the trade, because if the answer is no, it's not changing, then the answer to do I stay in the trade is of course you should.